What's up, guys? I'm on my way to interview the founder of Koya. It's super exciting, like an alternative sort of investments kind of app. And yeah, we're just sort of like looking forward to see what the future of investment looks like for everybody. You can invest up to like £50, I think, I believe. So super exciting. Can't wait to show you guys. Also, before I forget, don't forget to like and subscribe, yeah? Because like I feel like I never mentioned it. You should do that. Such valuable content. Also, apologize for this very interesting look. It's the rain, but that's London for you. All right. Hello, everybody. Welcome to another episode of Chai with Startup CEOs. Today, I'm joined by Iris, and she's the founder and CEO of Koya. Iris, welcome to the show.
Thanks for having me.
Yeah, of course. It's my pleasure. Do you want to share a bit about Koya and sort of what you typically do on a day-to-day, I guess?
Sure. Hey everyone, my name is Iris. As you all said, I'm the co-founder and CEO of Koya. So at Koya, we're looking to allow anyone to invest in alternative assets. And what we mean by alternative assets are assets such as watches, wine, Pokemon cards. And what we're doing is we're fractionalizing these assets so that investors can get access to them, starting from very low minimums. Our investors can invest via a mobile app, so it's super simple. And the minimum start at just €50. On a day-to-day basis, we're a pretty early stage startup. I'm working with two co-founders. We started at the beginning of this year. So the past few months, we've been super busy on building out our mobile app, fundraising, building out our brand, website, getting the first few hundred users on board. So that's what I'm working on a daily basis.
Yeah, awesome. And I guess it's like not every day that you wake up and think like, oh, I want to work on alternative assets. So why was this the kind of problem that you wanted to solve? Is there something, like a story behind that? Yeah.
Yes, so I can tell a little bit more about the sort of background story and how we got into this space, as well as how I started working with my two co-founders, Richard Draper and Ben Riazzi. So for me, for a long time, before starting Koya, I've been thinking about the problem space and opportunity of how to get more people to invest. There's a lot of people that don't invest. Well, even though they have money, they've got money in their savings account, and actually, you're just losing money year over year given the inflation. And I've been doing a lot of research into this area. Particularly, I was also really interested in how to get more women to invest, more personal sort of motivation. And I've been, talking to lots of people, especially those who don't invest, just to try and understand a little bit more about what is it that is, holding them back. What are the concerns, their hesitations. So what I found is that there's two main problems. One is around education and understanding, and the other one is around financial markets are complex. I like investing, so for me it's not boring, but for many people it might be a little bit boring. So what we wanted to do is do something that is radically different and offer assets that are much more exciting, engaging, that play into people's passions, and something that people can relate to, which is how we came to Koya. Like for example, when it comes to watches, Pokemon.
Yeah, I know friends that are crazy about investing in Pokemon cards and stuff like that. I think even Gary Vee is like super crazy about all these collectibles and things like that.
Yeah, for us really our starting point is that everyone has a passion, whether it's watches, whether it's music, whether it's Pokemon. Everyone has a passion. Everyone has something that they're excited about, that they know something about. But up to now, only the wealthiest 1% has been able to invest in these passions. And that is really what we are looking to change.
That's super cool. I think that what you said about the fact that financial markets are extremely complex is like something that I guess even my folks would sort of like resonate with, right? Like there's like complex crypto assets, equity assets that you can sort of like think about and then dabble around with. But the fact is that there's a limited amount of the population that's able to truly dabble in them. Whereas something like fine wine or like collectibles and things like that, it's much more familiar. And I think that wanting to own a percentage of something like that, which is a lot more closer to you, makes a lot more sense in a way. for a lot of people. So I think that's super exciting. Could you tell me a little bit about, like, I guess, how you met your co-founders, and like obviously I'm doing a startup myself and I'm always thinking about how is the best way to sort of communicate with my co-founder. What do you feel like are the best practices, especially like given these remote kind of circumstances and everything?
Sure. I mean, I think finding the right co-founders is obviously one of the most important parts of the business. Yeah. Not only do you need to make sure that, you know, your skills are complementary, but also, of course, you need to make sure that you get along on a personal level. You've got, you know, similar type of work habits and practices. So I mean, there's a lot of things to think about, and it's not been an easy journey, to be honest. So around a year ago, I joined Antler here in London. So Antler is in short, they are a fund that bring together lots of people into a program that there's to find co-founders, and then Antler invests in some of the businesses that come out of it. So in that program, I had a chance to meet around 80 or 90 cohort members, and everyone wanted to start a business. So in that sense, I was really overwhelmed with choice. Yeah. However, ultimately, I decided not to pursue any of the potential co-founders in the program, again, because there's definitely people that, you know, I really got along with and I liked, but, you know, there's just so many criteria, there's so many things to think about, and I think you really cannot compromise. I mean, you can compromise on some things, but there's other things that you just cannot compromise on. Yeah. For example, within Antler, it's actually sector agnostic, so that means that everyone is working on completely different ideas. So even though I met some people who were doing amazing work, they perhaps weren't interested in investing, which is what I wanted to do. So I would say, you know, it was a really good program, and I would do it again. But yeah, it's a journey. It's a journey to find co-founders. So then, what I did after, and it did help me really shape and clear my mind and clarify my thoughts, what I want and what I don't want. And so after, you know, obviously I still want to start a company, and then what I did is I just posted a job ad online. I explained a little bit about what I wanted to do, what I was looking for in co-founders, and I got really good responses actually, much better than I expected. So, you know, talked to the people that reached out, then had a really good feeling about Richard. We started working together for a bit, and after we decided, okay, we really want to move forward, we formalized, you know, our partnership, and then after a couple of months, Ben joined us as a third co-founder. Again, actually via a job ads, and, you know, finding the right finding the right people. And as I said, I think you really shouldn't compromise, and it's better to wait a little bit longer to find the right person, because ultimately, you know, a startup journey is going to be a long journey. It's going to be 5 years or more if things work out. So these few months in the beginning, it's definitely worth it to, you know, make sure that you find the right fit. And in terms of communication with the co-founders, I would say we're usually all based in London, which makes it easier. We can meet up in person, which I do think, you know, has value, especially as an early stage startup. Things change quickly. But of course, we also had periods where we've worked remotely, or one of us was abroad. So it's just really important that, I think there's two things that are important. One is that you communicate every day, and not just on Slack, but actually talk to each other on a call. It's a little bit different at Zen and Slack. And also that you're really clear on your OKRs or KPIs, just so that everyone knows what's going on, and you all agree on sort of the business goals. And I think one other element that's sort of more going back to the basics and going back to the start is, before you start working together, is making sure you really talk about all the important things, like what do you want to get out of this company, what are your personal motivations.
I think it's so important.
Also the practical questions, what is your personal runway, how much money do you need, just to make sure that there's no surprises later on.
I think that's such a big piece, right? Like aligning your personal incentives and the business incentives, and see whether it's a match right now or not. I think that's super important. What were the kind of like non-negotiables for you, like on like
you met different people. You met 90 people, and you said, I don't want to work with any of them, right? So what would where did you draw the hard line of like, yeah, these are not the kind of people I want? Because what I found is that like attitude and willingness to learn are like the most important features I feel like of any founder that you could potentially have, as opposed to, like you said, sometimes you have to compromise on a skill here or there. And if you wait for the perfect co-founder, well, let's be honest, like your startup's gonna die. So I feel like if anyone says they found the perfect person, it's probably not true. So like, what were the non-negotiables for you?
Okay, first of all, I knew that I was really passionate about this area around democratizing investments, getting more people to invest. So this was an area that I was and I'm really passionate and excited about. So we're a startup, we're early stage. Sometimes you have to pivot a bit, which is completely normal.
Yeah.
But at least I want to stay within this area. Maybe we're going to change a bit our asset class, or we're going to do. Of course, we have to be adaptive. But I wanted to do a business within this area. So that's the basic, which of course not everyone is interested in.
Yeah.
So that was a very, very important one. I think the other one as well is sort of the level of ambition that people have. I want to build a unicorn. I want to build a really big business, something that's scalable. Whereas other people, they might be more interested in building a lifestyle business.
Yeah.
So that's the other extreme. And then there's a lot of in between. What is it? What is good enough for you? And there's no right or wrong.
And I would say if you build a tech business, you're naturally going down the venture route. Whereas if you build a lifestyle one, mostly like bootstrapping and everything is your own, and scale is different, right? So I completely agreed on that. Like it's every person's like whatever fits their boat in that sense. And we've always had this sort of discussion around non-technical and technical founders, and different accelerators have like different percentages of those cohorts, right? I was just wondering, like in the context of like non-technical founders, something I struggle with on a day-to-day is like, my tech team will come and tell me like, every day, okay, this is the feature that we've sort of like built today, and these are the problems that we're facing with it. The CTO and lead developers will sort of like go back and forth. And then I'm just like, I spoke to X person, Y person today. This is what they said, and like it's not something that will convert into cash immediately. It's like a 6-month like journey, I would say, in terms of like fundraising conversations and stuff. How do you sort of measure your input and things like that?
Yeah, it depends a little bit on the stage that you're at with the business.
Yeah.
So, for example, the first few months in which we were building this business, I wasn't focused on fundraising because we first wanted to make sure that we clarified our proposition and got a few initial leads. So at that stage, I had a couple of metrics for myself. For example, around user research, user interviews, making sure to speak to X number of users and build some conclusions based on that, which I think is super, super important early on to speak to potential customers. And then I also had a few more traditional marketing metrics for myself, such as get featured on X number of blogs, make sure that our domain ranking improves, work on our SEO, increase our organic search traffic by X%. So more the traditional type of marketing metrics. And I do think, even though you're early, you can be quite data driven with that. Then of course when it comes to investors, it's a little bit more intangible sometimes, because as you say, you might speak to someone and it's a really valuable conversation, and it's gonna it's going to pay off at some point, but it might not be today. Of course, you do have to have some KPIs for yourself, even if that is speaking to a certain number of people. But then I think there's also a certain level of trust that you need to have between the co-founders.
Yeah, of course.
That they trust that you're doing the right thing for the business, even if you have a conversation and it doesn't, as you say, lead to raising money right away. But again, there as well, you can have a mix of very concrete goals and a little more soft goals, because for us, we're currently fundraising and we do have a target in mind in terms of this is how much money we want to raise and this is by when we want to raise it. So in that sense, we are very goal-oriented.
Yeah, that makes sense. I think setting those soft goals, especially in the earlier stage, and like what you said about customer discovery, especially, is super well. I'm doing that right now. Speaking to users all the time. I think that's one of the best uses of my time, probably. And you mentioned fundraising. Obviously, like you've you've sort of been through the basis now. What are some sort of fundraising hacks that you have? And number two, I guess, how do you think about how much money to raise? Like, what do you factor in order to decide, like, I want to hit this number based on, like, what are the factors that go into that for you?
Yeah, so we've so far closed an angel investment round with some really amazing angel investors. So amongst others, we've got Gary Dolman, one of the Monzo co-founders, Andre Mohammed, one of the FinTech co-founders, and Gary Clark, who used to head up global equities at BlackRock. So we've really got that nice mix of startup and more traditional, investment and finance. And so how I found these initial angel investors is actually through network. And it doesn't mean that you need to have had a personal network for years and years, even if you're a little bit more new to the scene. For me, I've been in startups for a long time, but I am quite new to London. And when I moved to London, I had to rebuild my network because I'm in a new city. But it is possible, you have to go out there, you have to go to, I think now that COVID is sort of, things are getting back to normal, there's more and more events again. I think it's really important to
all the branches.
Go there, connect with people, because that is, especially I think this initial sort of angel investor, that is what can help you get those initial angel checks, and then actually even now, we're still in the process of raising our first institutional round, VC round. But even there, the way I got connected to most of the funds, it's all through network. One person introducing me to someone else. So I think that is really the most important thing. Aside from, of course, having a good business idea and the right team, but that's just the basics.
Yeah, if you don't have that, then you have other things to worry about, right? No, but you heard it here from Iris, network. That's the name of the game, right? And obviously, when you think about FinTech as a whole, regulatory challenges are like something that comes to the forefront of my mind. I was working on this crowdfunding thing before, and that's when I kind of initially reached out to you to talk to you about it. And it seemed like a tall task to really go through the FCA or go through the SEC and talk about all these sort of different asset classes that you're facilitating investment for. How did you go about that, and navigating that whole pool? If there's a FinTech founder watching, what are the first steps that they should sort of take?
I would say, of course, I cannot really give generic advice, but it really depends on what kind of business you do.
But this is not advice.
But let's say the obvious steps that you would take are probably, looking at similar companies in the same country, ideally, because of course it's going to be very different in every country. Just go through their terms and conditions. If it's not public, try to sign up and get access to them. I think that would already give you at least a very, very basic understanding of how others are set up and what might be the possibilities. Then once you have a rough idea of how you want to set that up, then I do think you're going to need a lawyer to help. Of course, you can always have a couple of free sort of conversations just to kind of get a little bit of direction before you commit to any specific law firm that you want to work with. I think what is quite good in the UK, but also in other markets, it's quite similar. As a startup, there are quite a lot of possibilities to work with regulatory hosting firms. So these are firms that where you can work under their license for a period of time. So those are sometimes good options to get started with. Again, typically you can find out who those hosting firms are from your competitors, so just sort of researching the market a bit, and those can be good ways to get started, depending of course on what kind of business that you want to set up. So. And also, I would say that my previous job was, or my previous company was also a FinTech company, more in the digital banking space. There as well, of course, highly regulated. But again, there's so many partners that you can work with that provide banking as a service, that provide payments, that provide a lot of infrastructure around your business that you might not even have to be regulated in the beginning if you can find the right partners.
Right. No, absolutely. I think that's really interesting advice, and I was thinking about how to look at crypto licenses and stuff like that over here. Not the easiest thing in the world to do, and they factor in things like experience of the team and all that kind of stuff. well, I mean, I just graduated uni. I don't know how much experience that counts for, but like it'll be really fun to see what happens there. But like the hosting firm idea, I think is pretty good in that sense. Now, when you think about alternate assets, right? Like four or 5 years ago, you would have probably jumped at conclusions like collectibles, wine, and things like that. Today, when you say alternate assets, sometimes your mind jumps to metaverse, NFTs, digital assets, and things like that. What's the demand for that like amongst your customer base right now? Where do you see yourself fitting in that?
Yeah, I mean, I don't think it has to be either or. I think both markets can keep growing in conjunction. Especially, some of it depends who we speak to, but we've definitely got some users who, for example, made a lot of money in crypto and now want to diversify and put a bit of money into tangible assets, for example. But that being said, the way that we're set up with Koya, it's actually very flexible. We're starting with tangible assets. Right. But definitely, we think digital assets can be really interesting to move into as well. It doesn't necessarily have to mean NFTs, but there are all kinds of digital assets, right? For example, think about music royalties. It's a very interesting example of something that you can fractionalize. So there's definitely tons of opportunity, and I think both markets will continue growing over the next couple of years.
Absolutely, and like in terms of like pop culture artifacts and things like that, like what do you envision that looking like on Koya?
So in terms of our marketing and our go-to-market strategy, definitely working with the right communities, the right influencers. We think is going to be key, whether that is pop culture, sports, music, or whether it's an influencer in the watch space, for example. Right. There's quite a few big.
Really, there's influencers in watch.
There's huge YouTubers, Instagram pages, Facebook groups around watches, for example. So actually, you can draw a lot of parallels where an influencer can help promote Koya, and of course those pushes are going to be very key for us in order to scale and reach a broader audience.
Right, and what's the asset that you would buy like on your platform?
Myself?
Yeah.
It's really interesting. When I started the journey with Koya, I was actually most interested in wine, which I think is a very interesting asset class. It's something that has gone up quite stably over the last many years. But the thing is that now that I'm in the business and I'm learning about some asset classes that I didn't know much about before, when you learn more, you see opportunities everywhere. So it's been really interesting. Like, for example, the Pokemon card market is something that I didn't really know much about prior to starting Koya, but it's something that I've become more and more fascinated by, and I think that's the beauty of it as well. Even for our users, we believe that if we provide the right information and education, there's going to be a lot of opportunity for us to cross-sell different types of assets. Of course, we need to work with the right experts because it's not going us as founders or whoever we hire in the team. We cannot be experts in every single asset class. So it's going to be really key for us to work with the right partners, the right experts. But I'm really excited to be moving into to different asset classes.
Right. And like I think our 15, 16-year-olds selves would be sort of like proud of us because they're still investing in Pokemon. But like, let's talk about the vision for Koya, right? Like the next 5 to 10 years, what does that kind of look like for you? What does the world look like when Koya is kind of thriving?
So for us, for me, how I see the next 5 to 10 years is in 10 years, I believe everyone will have alternative assets in their portfolio. It's going to be as accessible as stocks. The way that, for example, Robinhood has allowed anyone to invest in stocks. We believe this is the same transformation is going to happen in alternatives. And I don't think, it doesn't have to be us alone. It doesn't have to be one platform. I'm sure there's going to be multiple platforms popping up, and there's going to be room for multiple platforms to be successful. Probably all of us will have a slightly different approach. Even I'm including also your business. Looking more at investing in entrepreneurs or influencers. So I'm sure there's going to be numerous platforms coming up looking at different kinds of alternative assets. And in 10 years, I believe it's going to be as mainstream to invest in a watch as investing in, an Apple share.
Yeah, that's super cool. I think like what I was thinking about when you were saying all this is along the lines of the community and the strength of the community as a factor for the value of the alternative asset that it, like you said, there was like Facebook groups for watches and like wine and things like that. I don't know, I feel like when you tie in the Robinhood example of like AMC, all this kind of like stuff, when you look at that whole scenario, it was basically a group of people on Reddit that got together and were like, we're gonna, pump this or whatever it is, right? So in that context, I feel like it's very possible that something like that could happen on your platform as well, where people get really passionate and excited about an asset and just like go ahead and like buy it together from like a Discord or Reddit or whatever. So I think it'd be very interesting to see the...
for sure. I mean, this is something that we've been thinking about and we're thinking about a lot. We don't have the exact solution yet, but as you say, how can we, let users initiate or crowdsource themselves what they want to buy and get together and then buy that? Because of course at the moment it's a little bit more driven by us as a platform, but definitely it's going to be very powerful once that community gets big enough that it's actually the community that drives drives
it's
everything.
like that social piece of sort of like investing that's like very prominent now. I mean, we've seen it so much over the years, like with Millennia and like public.com, they're already doing it sort of in the context of public markets, and I guess
even for us, there's a lot of social elements that we can bring into the app.
Exactly.
Be that elements such as eToro, where people of course can copy each other's trades or sort of watch performance, or as you say, public.com, where you can explain a little bit more of your rationale why you're buying something, get other people's thoughts on that. We can gamify the experience. So there's a lot of different routes that we can explore.
Absolutely. So I guess like the tougher parts or the not so good looking parts of the job is the fact that you have to negotiate insurance, storage costs, transportation, whatever. How do you like jump into those conversations? Like how do you get started in that? It's the same as the regulatory piece, like I guess like in terms of how do you get started with this that a lot of people don't talk about. So how did you think about that?
Yeah, so how we get started is we just look at the asset class we want to get into, look at who are the big players in this space, who are the merchants who are very active in selling these assets, and then engaging with them. And some of them they're happy to engage, they are happy to work with us, partner with us, sell to us. Some of them maybe not, which is fine as long as we find a handful of strong partners. The storage and insurance part is actually very straightforward. We don't have to negotiate that much. There are existing facilities where we store our assets, and they just charge us a certain price for it, and we pay. Of course, longer term, once we get bigger, as you say, we can definitely negotiate on that. But at the beginning, that is not really what we want to focus on. Also, we're early stage, right? We're not here to optimize the last 2% of the margin. We're really still in that early stage where we are. Finding product market fits. Yeah, super cool. Like you can have like a Koya warehouse, like full of like all of your stuff, or maybe. Oh, absolutely. So these elements, it is interesting. Something that we can look at when we get to scale. But not something that we want to worry about on day one. I can even foresee like a Koya sort of like museum / something like that, where you're showcasing all of the assets that are being invested in, because you're storing it anyways. Like you might as well showcase it. An experience out of that. There's in every startup there's many different steps to go through. So the step where we're now is as a team we really want to be focused on building the right product and getting users for that product. The operational side of things, we're going for the path of least resistance, so working with existing facilities, suppliers, but of course over time there are opportunities to look into how can we make this into our own competitive advantage as well. Right. So you guys can see Iris is extremely focused. I've been trying to get her to like move away from the focus bit, but that's what you get from like really cool like seed stage like founders, right? Like they just super high on the ball. So what should you expect from like the secondary market that you're planning on launching? Like what's going to be interesting about that in your opinion? I think what's going to be interesting about that is, first of all, these types of assets usually are illiquid. So, it takes time to sell these assets. And not only time, there's this sort of logistics involved. You might have to ship them somewhere, you need to authenticate them. So by having this secondary market where people can trade fractions, already, just that by itself is making the market more liquid. But of course, we want to go one step further than that. Obviously, we've seen some challenges that secondary markets are having in private markets. If it's a bilateral market where it's like, okay, I'm selling something, I have to wait for a buyer, it might not always be that optimal. So we've got a few ideas in mind of how we can make that very, very liquid. I cannot disclose them yet, but we do have we've got a few thoughts on that to make sure that because what we want to do is we really want to replicate that experience that you have when trading stocks, or ideally even trading crypto. It's only 24/7, but making it a little more liquid than just a bilateral market where I'm selling something and I have to wait for someone to buy.
Yeah, true. That's very cool. And I guess to wrap things up, what I guess should we look forward to from Koya? Is there something that you'd like to plug? And finally, one piece of advice that you have for another Gen Z founder, I guess, what would you kind of tell them is the right thing to do when they're looking at tackling a problem or getting started on a business?
So on the Koya side, we just launched our app in the App Store, so check us out.
Download that stuff.
Our website is joinkoya.com. Go and have a look, download the app and start investing. On the Gen Z side, the advice, I think there is no right or wrong, there's a right path for everyone. I would say I have no regrets on the way I've done it, which is after college, I've taken several jobs in early stage startups, and I think that has really been the right path for me. Especially when you're in a high growth startup and you can be one of the first employees, you'll learn a ton. You'll learn so much, and that experience will just make it a lot easier once you move to being a founder. And also, it might make it a little bit easier to raise money versus not having any experience. But that being said, I mean, if you really want to do it, you can do it. It might just take a little bit longer if you want to do it by yourself. No,
I think that's excellent advice, right? As in, I've had people on the show who've sort of been who've done 4, 5, 6 degrees and maybe gone on to work for McKinsey's and things like that, and then jumped into the startup and raising a rocket ship, right? In essence, which is insane. But at the same time, you sort of suggesting this sort of early startup route, being an early employee and the value of that. And then I guess there's me on the total other end of the spectrum, is graduate. I guess there's more drop out in between college as well. That's the other side. A bunch of different paths that you can pursue, but this is the one that Iris has chosen, and I think honestly something very exciting to look forward to with Koya. And it's going to be very interesting to see the kind of different assets that come on there as the years progress. And I look forward to getting invited to your unicorn IPO kind of event, which is something we're waiting for. She's totally going to forget again. But anyway, this is going to be out there. I just show it to the security guard. I know her. No. But anyways, thank you so much for taking the time, Iris. I really appreciate it.
Cool, thank you.